bit more in-depth results from the signing that took place this year. What about you?
Oh, yes. For me, it's been the presentations.
Right.
Listening to Professor Rama, I've listened to him for the past 5 years at Daphnis. I mean, he's a regular, he's always here. And his content is just what you can find anywhere else. So, like I mentioned when he was done, what I always do at the end of Daphnis is to get his materials and other striking presentations, and go through them just so that we can begin to implement some of the recommendations, in such presentations.
Right.
So it's been very, very interesting for me, getting to meet new people. Yeah, there are people who are coming to Athens for the first time, and yes, reuniting with those that have been here.
Right.
So yes, Athens is like a family. So yeah, some people are here. They will keep coming, and they will keep contributing. And yes, we must talk about our sponsors. All right, this would not be possible if they do not sponsor the event.
Agreed.
You understand? So yes, and maybe we should also mention that the Honorable Minister of Solid Minerals Development has given a great lead in this sector. We've seen remarkable progress. We've seen a change in narrative as far as the sector is concerned in Nigeria. And from what you saw today, or rather from yesterday, other African nations who are here, talking about what they are also doing and how they're taking a cue from what Nigeria is doing. So all of this just brings to bear the fact that AFNIS is a very, very important conference.
I agree.
And we hope that everyone here to share the same experience like we do. Yeah. So, ushers, please help us get everyone back here. Everyone back in the room. Please take your seats. We're about to begin the technical session. We have 4 plenary sessions to round off AFNIS 2026. Just 4. And these 4 will be impactful, they'll be powerful, there will be a lot of ideas that will be shared in these sessions. So I don't think we should waste any more time. If we have the moderator for the oil and gas and base lead power session in the room, Osefa Anegbe, energy law, policy and transactions consultant. Do we have him in the room? If we do, I think we should just, fantastic. All right, so we have the moderator for that session. That's the session that is leading this.
Panel discussions this
yes,
afternoon.
exactly.
All right. Ladies and gentlemen, as we do introduce the moderator for this session, let's also note that industrialization now requires power.
All right, so Osef and Negba, just get ready. Make sure all your panelists are also ready. We've just been reliably informed that a signing ceremony will take place before that panel session kicks off. Between Liberia and Bill Hook,
That's
right?
correct, yes. So ladies and gentlemen, if you know that you are part of that signing session, we will welcome you to the stage at this moment. And I'll ask the ushers to assist with the table. Please assist in bringing the table to where it needs to be for that signing to take place. At this point, we welcome Bill Hook and Liberia. Are they in the room? They are in the room and making their way to the stage. Ladies and gentlemen, if you will please help me with a round of applause as we bring them to the stage for the signing.
And just to let you know that all of these partnerships and deals were actually contracted, or if you like, formulated from last year's AFNIS. So if you're here and this is your sector, I mean, you can begin to do the needful now, just so that when we return for AFNIS 2026, we'll have, more signings, more partnerships, and of course, more buildings as a result of ideas that have been shared
That's
in
right.
AFNIS 2026. So,
Ladies and gentlemen, I'll make that call one more time. Bill Hook and Liberia. Just to make sure that we stick to time, can I please invite you to the stage? And I'll also ask the ushers to assist with getting the table ready. Gentlemen, I'll please invite you and ask you that you go to the far end of the stage for the table.
we'd also like the media team to please take position so they can also document this moment. Videographers and photographers, please take position as we witness another signing ceremony before we make some progress to the first plenary session today.
Ladies and gentlemen, we do apologize for that delay, but please let's just bear with them as they make the preparations for that. And while that signing is ongoing, please, I will beg that the panel discussion that is coming place right after this, if all the panelists are also present in the room, you will be coming up immediately after the signing session.
Please, a round of applause for the New Frontier team. A round of applause for them. Yes. Well done, congratulations. And as I was speaking with one of the team members of New Frontier, he was saying, well, after this signing, it's possible they could be returning to AFNIS next year as sponsors.
Wonderful. Great news.
Yeah.
Great news.
Bill Hook and Liberia.
Okay, guys, I want to give a little bit of context about this. On the last day of AFNIS 2025, a 15-minute meeting took place about an opportunity within Liberia between the people on here, which is New Frontier Development, and a delegation from Liberia to create something called Bill Hook Foods. And it is a massive, massive investment into the country that will transform the agricultural sector as well. So in 12 months, we are now at joint venture stage, and we're starting to operate. So this is one of the proud moments from AFNIS 2025, the completion of this deal, and we're hoping to many more. So thank you very much.
Thank you very much, Archie. Congratulations, Bill Hook and the New Frontiers team, as well as Liberia. These signatures will birth something powerful that will transform the natural resources landscape in Africa. A round of applause for them. Congratulations, congratulations. Looking forward to hearing the success stories from all of this happening today. Thank you. Congratulations once again to Bill Hook and Liberia.
That's right. Now, as they take their seats, ladies and gentlemen, we move on to our next session for this afternoon. And this is, as we mentioned prior to the signing, a panel discussion tagged Oil and Gas and Base Load Power. Why this session? It's quite obvious that industrialization requires power. And for many African economies, natural gas remains a critical bridge between current energy realities and future ambitions. This panel will explore how gas infrastructure, public-private partnerships, and regional cooperation can support manufacturing, industrial growth, and energy security across the continent.
All right. At this point, let's make welcome the moderator for this session, Osefam Anegbe, Energy Law, Policy and Transactions Consultant. Please, a round of applause for her as she comes forward. Brilliant. Beautiful to see. We'd like the panelists to also take stage as soon as their names are mentioned. And just to let you know that this panel session is going to last for 25 minutes. Yeah. Go ahead.
All right. Your Excellencies, distinguished Honorable Minister, guests, panelists, ladies and gentlemen, good afternoon, even though I think that with the weather outside, it's appropriate for me to say good morning. It's my absolute pleasure to welcome us to this very important and timely discussion about the role of oil and gas in Africa's industrial future. Now, before I begin, I want us to do a little exercise. I know we just came in from lunch. A little exercise by the show of hands. When we hear oil and gas, what usually comes to mind? What comes to mind first? You know, refinery? Any hands? Refinery? I don't see hands. Okay. Petrol? Aha, I see one hand. Okay. Exports? No hands. Forex? No hands. Oh, okay, I see hands. Okay, for Forex, good. Power, thank you, power. FAC, anybody? Okay, so let's try the one that is very popular. National cake. Aha, many hands. Okay, and with the recent global crisis, Strait of Hormuz. Okay, I see hands. Thank you. Thank you. Usually the word manufacturing, right, doesn't usually come to mind. Did it come to mind for anyone? Okay, so there are usually no hands. And that's why the conversation today really matters, right? More recently, we've heard about factories shutting down. We've had factories scaling back operations or even just relocating altogether. And there's one challenge that has constantly been the key problem, and that is reliable and affordable power, high cost of production. Now, for over decades, Africa has viewed oil and gas as a commodity for exports. And then in Africa, I think we export over 45 to 50% of our produced natural gas to international markets. Particularly in Nigeria, we do export about 60% or more of our natural gas as a commodity. And now the question, and the more important question, is that how do we leverage these very, very rich oil and gas resources that Africa has to drive industrialization, economic growth, create jobs, and also strengthen our regional manufacturing capacity? You will all agree with me that the challenge for Africa now is no longer discovering our resources, but however, how do we convert those resources into industrial wealth? Now today, as someone who has worked at the intersection between power, oil, and gas sector, and some of the work that I currently do with Expedite Consulting, I've come to appreciate that industrialization alone cannot be achieved by just energy production. A couple of factors come together to ensure that we're able to get these resources from the wellhead to the factory floor. And that brings me to today's conversation. Oil and gas and base load power. Gas for industrialization, defining oil and gas mandatory role in powering regional manufacturing hubs. And when we talk about baseload power, we're talking consistent 24/7 electricity. Over the course of this session, we'll explore the business case for dedicated gas infrastructure to industrial zones. We'll talk about the role of oil and gas investment in anchoring reliable baseload power generation, and we'll also look at innovative models for structuring gas-to-power partnerships that can support industrial growth across national boundaries. As we listen to our panelists today, I want for us to keep questions, 2-3 questions in mind, and that would be, what role should oil and gas play in powering industry, creating jobs, driving economic transformation across the continent? Ultimately, should the success of Africa's oil and gas sector be measured by only barrels productions and the number of molecules that we export, or should it be measured by industries built, jobs created, economic transformation achieved, and our economic development? Today, we're privileged to have with us a distinguished panel of leaders cutting across policy, finance, infrastructure, and the broader energy value chain. And in no particular order, please join me as I welcome Alhaji Ibrahim Baloni. Please, a round of applause for him. He is the Group Chief Operating Officer of AMG Petro Energy Limited. Is Alhaji Baloni in the hall? Okay, so I'll move on to the next panelist, Dr. Femi Ogunsteinde. Okay. Dr. Femi Ogunsteinde. All right, so I'll call on our next panelist, Honorable Jacob Kabakole. Honorable Jacob Kabakole. He is the chairman of the Liberian Petroleum Regulatory Authority. I hope I did not murder that name. I did good, thank you. Please, a round of applause for Honorable Jacob Kabakole. I need to call it now with more confidence. Okay, so let's also welcome Engineer Kingsley Ene, Deputy Director and Head of the Energy Resource Department at the Federal Ministry of Power. I think I saw him. Engineer Kingsley Ene. Okay. All right, so I'll call on our second to the last panelist, which is Mr. Simon Alkali from the Project Development Department of the Africa Finance Corporation. Is Mr. Simon Alkali in the building? Oh, he's coming. Please give him a round of applause. I hear that the more you clap, the faster the feet move, so let's keep the applause coming. And then last but certainly not the least, I'd like to invite Mr. Esueme Dan Kikile, Esquire. He is the Director of Monitoring and Evaluation Directorate, Nigerian Content Development and Monitoring Board, NCDMB. Please, let's keep clapping. Don't get tired. Don't get tired. We've been thrilled up. All right, thank you for that applause. My name is Osefa Nanegbe, and I am an energy lawyer. I'm very delighted to be moderating this distinguished panel. My role today here is really simple. I'm here to facilitate a lively discussion for you, my wonderful audience, to ensure that we hear all our panelists and to keep us all in schedule. So I may interject, every now and then just to keep us in time. I hope you wouldn't hold it against me at the end of this. All right, so to my audience, thank you for joining us. We'll permit for some questions if the time allows, and then we'll take those questions. But if not, I'm sure our panelists will be more than delighted to answer those questions afterwards. With that, ladies and gentlemen, let's get started. Thank you. Can everyone hear me? Great. All right, so thank you. Can I use this other mic? All right, perfect. Maybe we would have to share. Okay, so I'll start as we start off this conversation, right? And my question really will go to all the panelists here, but I would like to start with you first. Africa possesses significant natural gas resources, yet much of the continent remains energy poor and manufacturing light. Now, why has Africa's gas wealth not translated into industrialization and reliable electricity access at scale, both nationally and regionally? Like, why has that happened? What are the challenges that we see currently? I'll start with you, Mr. Dan Kikili.
Okay, thank you. And first, let me thank the organizers for inviting NCDMB. For those who do not know, NCDMB is the Nigerian Content Development and Monitoring Board. We are responsible for implementing the government's local content policy in the oil and gas sector. We were set up in 2010, and 16 years after, we have moved the needle a bit in terms of Nigerian participation in the oil and gas industry. So to the question, I would say two things would have been responsible for that. Number one, gas was not priced competitively previously, and so there was no attraction for investors to dive into that area. Because it was not competitively priced, it was not profitable enough for investors to be involved deeply in that area. Secondly, policy certainty, policy clarity seem to have been missing. In the last few years, we have seen that there's been reforms, and not only that there's been reforms, but we also saw a very strategic move by this government, headed by the President, His Excellency Bola Ahmed Tinubu, GCFR, to create the Ministry of Petroleum Resources Gas, which meant that there was a specific focus, drawing attention to gas and drawing our own attention to the fact that it was an imperative for our economic development. Thank you.
Thank you. Honorable Kabakole, do you want to speak to that? Why and what are the challenges that you have seen?
Well, let me first thank you for having us here, representing the Liberia Petroleum Regulatory Authority in Liberia. As my colleague mentioned, I think gas probably didn't attract a lot of attention as compared to the oil itself. But on the overall in the industry, I think one of the reasons African countries or frontier nations like we are, Liberia, continue to struggle, and we haven't done very well as a continent is basically has been the lack of knowledge. But that, I must say, is changing. Lack of knowledge going up against the multinationals who have come, who had from A to Z, everything in the industry that was needed, probably smarter lawyers, better technicians, better technical people. And so that sort of hamper Africa's growth. But one great thing that is happening now with what AFNIS is championing is this One Africa policy, where we're coming together as a team to help one another. Countries like Nigeria and other African countries who have done very well in the industry, maybe they weren't approached, but we have not had the opportunity to cut across and share knowledge, experience, but that is happening now. And I can tell you from what I see going on in this business in Africa in the next 10 years, if you're a multinational and you're coming for an oil block in Africa, you better know how you're coming. But you know, we've come a long ways, and we intend to get stronger.
Oh, thank you for that. You better know how you're coming if you're coming into Africa.
Correct.
Like that. Mr. Alkali, do you have some thoughts on
Sure.
this?
Thanks for having me as well. I represent AFC, which is a development finance institution focused on infrastructure development. I think from my perspective, or at least from the project and investment perspective, one key thing that has been missing is it speaks to a broader infrastructure problem, which speaks to the idea of bankability and being able to structure projects that can be financed and deliver the benefits that we expect. I think when it comes to gas and industrialization, what has been missing is infrastructure to support gas to local demand that can create value. So when you talk of gas to industry and things like that, but then the infrastructure to actually anchor that tends to be a key bottleneck. I think we've treated it very well as a resource. So in terms of exports and LNG, we do very well. But when it comes to taking that resource and internalizing it to things that add value, I think that's one area where we've struggled.
Okay, thank you. So I'll come back to you on that, on another question. But I mean, just putting this issue on the table so that we get right into it. Should Africa or should governments mandate that a percentage of gas production be dedicated to domestic power generation and industrialization? Or should governments just allow the market, forces to determine where this gas goes? Now that we're shifting focus from oil to gas, should we have government, mandate that a portion of that goes into power generation, goes into industrialization, or should we just allow the market to flow? I would always start from the regulator.
All right, thank you.
Yeah.
I mean, I work as a regulator. My work as a regulator is a development regulation. And speaking as government, it's the whole essence of utilization of our natural resource is for the development of our economy. It's for us to be able to create opportunities for economic growth.
Yeah.
It's for us to be able to create employment opportunities for our people. And so we cannot allow business we cannot allow it as a completely business decision.
Yeah.
So we must also look at it as a social service, as something that is going to stimulate other sectors of the economy. So for us, I mean, in NCDME, we see the conversation around gas as evolving beyond energy security to one, job creation, industrial development, local manufacturing, and sustainable economic growth. To achieve that, we must, as a matter of course, set aside some part of our gas for power, because we need reliable electricity, reliable power for industrial growth.
Yeah.
We need to set aside part of our gas for domestic use. And we commend companies like the Nigerian LNG that has on their own set aside a part of the gas that they produce for local LPG consumption. I mean, that's the only way that we can also derive benefit from our natural gas.
Yes. Okay. Thank you. He says we need to commit, to ensure that a portion of the gas goes into that. But before I come back to another regulator, I want to go to the financier and say, do you believe that if I come to you as an investor and say there's a project at hand, however, there's a mandatory domestic gas commitment and a portion of that gas needs to go to power generation, would that attract finance? And what factors would you be looking at? Would you be ready to commit your money to that?
I don't think mandates are bad, but I think mandates on their own are ineffective or can be ineffective. I think those mandates need to follow demand, right? So it's one thing to tell someone you have to sell locally, but it's another thing where there's also anchor demand locally to support that mandate. Then it becomes an easy sell because it's less complex, right? I think the challenge people face is where the local demand hasn't been aggregated or well delineated, but then there are mandates and people can't meet those mandates. That's where it becomes a challenge. So mandates are good, but I think that needs to come hand in hand with sort of demand aggregation.
Okay, so mandates are good, but it needs to come hand in hand with demand. Honorable Kabokale, do you agree?
Yes, I do. you got to have mandates around natural resources. It seems like my colleague to my right and I may have read the same scripts. I remember probably a little over 10 years ago, I visited a rig in Ghana, Jubilee Fields, and I saw oil being processed and shipped. But then by then, they did not have their gas infrastructure in place. And the gas was just being flared. Can you imagine how many thousands of dollars was going away? So Africa needs to, again, that knowledge that this is going to come with oil. And so a portion of what the folks, the financials are going to put together to help us manage or drill this oil, we have to have that infrastructure in place with the gas. The natural resources belongs to the people, so obviously the government should take a good portion, a good portion of those resources, and make sure that the citizens of that country benefits from it. So yeah, I'm 100% in favor of that.
Okay, but then again, at what point does, and this is back to you, right? At what point does energy security become too important to leave entirely to the market dynamics? I know you've said yes, the government should, it belongs to the people, but at what point, does it become too important to leave that entirely to market dynamics? Should we even leave that to market dynamics?
No, of course not.
Okay.
You shouldn't do that. You should make sure you have policies in place when those folks who are going to process this gas for market comes into the country. They have to sit with the policy makers of that nation and say, listen, this is what's in place for our citizens. And it's a simple thing, you take it or you leave it. Because I'm telling you, if you manage to get a front row seat with a sitting government to discuss that, I think you should make sure before you leave, you get a deal. Because as soon as you go, somebody else is going to come.
That's true. That's true. Okay. I'll go back again to the financier, right? Because, like we all know, money is what determines what moves, right? Great policies, you mentioned infrastructure, but what other roadblocks are there, to gas industrialization in Africa? What other roadblocks do you think that exist? Or from your experience, actually?
I think the resource is there, obviously, but some of the things that have been touched on, pricing, for example, local infrastructure, even demand, right? There's potential demand, but there's actual demand. So the way I would look at it is almost like a value chain, right? What are you doing to bring the industries that need gas, not just for energy, but also as feedstock? We've done very well on, not very well, but we've paid a lot of attention to gas to power, right? Yeah. And that is heavily dependent on the electricity market and the ability to pay, etc. I think one good way to support that market is by co-locating with industries that can share that gas demand such that you don't have such a strain on gas producers, because today, if your electricity market isn't able to pay, it feeds all the way back to your gas producer. So I think one key part that has been missing is the work to put this demand together such that it's economical for gas producers to say, look, I'm going to take a bet on supplying gas here, because even if it's not just this power plant, there's a fertilizer plant, there's a methanol plant, there's an ammonia plant, etc., all these things. So I think that, and then things like pricing and the infrastructure have been the main bottlenecks.
Okay, just so that we don't stay on bottlenecks, I'll stay with you for this next question, and then I'll go back to the policymakers. Now, you've said that yes, we need to take away these bottlenecks. How can financiers help to de-risk such projects? What can the financiers do from your experience looking at cross-border projects? How can they de-risk it?
So from a project perspective, the part of the organization which I represent is the project development organization team. And you're starting to see a lot more emphasis on DFIs, for example, providing early stage funding for project development. So I think providing that funding, yes, but then also the technical expertise around structuring the agreements, bringing in the right partners, crowding in other capital, which is very important because you have, other sources of capital which are available, but they're very shy. You need an anchor, which is where I think DFIs and local financial institutions can play a big role. So doing that project development work and providing the funding, and then anchoring capital that's able to crowd in other sources of capital, I think is the approach more institutions need to take, and which is what we do very well at AFC.
Oh, wow. Thank you. And this is interesting because now I want Honorable Kabakle to tell us from a regulator's perspective, yes, what's happening. How can you encourage, because now the financier has said, okay, we'll put certain factors in place. How can the regulator encourage such? How can they encourage these projects? How can we ensure that projects are commercially viable, for cross-border projects? Because at this point, we know that we need to have public and private partnerships come in to be able to throw things like this. How can regulators, whether within the nation as a country, Nigeria, Liberia, any other African country, or as a collective regionally, how can we ensure that, these projects fly? What can we do?
So regulators are like government. So we work for our government. Our government. What we can do is, one of the things we can do is to make the process a little bit friendlier. We can talk about reduced taxes. We can talk about once the project starts, and for example, you have a multinational that has come into the country to put in an infrastructure. You can talk about low levies on what's coming into the country to put this infrastructure together. For example, the Liberia Petroleum Regulatory Authority recently attracted Total Energies. Now that was a big catch by us. Mm-hmm. And also Oranto Petroleum from Nigeria. We had to relax the process in order to make it a little friendlier for multinationals to come into our basin. So similarly, from a regulatory perspective, I think the way to do it, to work along with the finance people and the business people, is to relax those levies and rules that'll make it a little friendlier for them to come in.
Good. Friendlier processes. NCDMB, we work with investors every now and then, right? So what would you say is the stronger investment case today?
Yes.
Build a gas pipeline to a power plant, or build a gas pipeline to a manufacturing corridor? And then any other thoughts that you have to add to what Honorable Kabakole said?
Yes. So for us, we are a regulator, but we pride ourselves as a development regulator, a business enabler. And to do that, we have catalyzed businesses. We have invested in the modular refining sector that initially didn't seem to look prospective. NCDMB joined hands with Walter Smith in Ibigwe, Imo State, to catalyze that investment. And today we have several modular refineries that have sprung up. However, government alone cannot be able to fund these infrastructures. Yeah. And that's why we need the public-private partnerships. To have strong PPPs in place, you need some clear line of sight in different areas. For example, you need to have very clear and stable regulatory environments. Mm-hmm. You also need to be able to see bankable commercial frameworks that are put in place by businesses. And I'm sure that the the AFC people will speak more on that, about being able to put in bankable commercial structures. How do we do risk sharing in this environment.
Yeah.
For you to fund big ticket projects like that, people should be able to have what I would say 1% of 100 million than having 100% of 1 million. So we should be able to create businesses that are more collaborative, more people come together to be able to scale it. Long-term gas supply security is critical
Yeah.
for you to be able to go. So that's where we need the oil companies because they have the feedstock that can be supplied to the industry. So you also need incentives for domestic gas utilization. He mentioned the issue of demand and supply. So if you don't have local demand, I'm not sure you want to invest and then leave it to the domestic market. So there must be some incentives for domestic gas utilization. So for us in NCDMB, we have created a fund that supports businesses. We have the Nigerian Content Intervention Fund that we give to businesses at single-digit interest. And that's to support businesses, to fund infrastructures, to fund asset acquisition, and so on. Just to help ensure that we have the enabling environment that these companies can thrive and be able to fund the infrastructure in the gas sector, because the natural gas space infrastructure is a major deficit.
Thank you for that. And just, in wrapping up, I'm wondering if you could implement one policy, looking at all the points that you've highlighted, one policy or one regulatory reform that would be most helpful in accelerating gas industrialization in Africa. What would that be? Just one policy or regulatory, one.
For us in NCDMB, I think is to be able to create gas hubs around the different zones of the countries so that you can be able to move gas to industry, move gas to homes, move gas to factories more easily. I think that's something for us that we will be very much interested and which we are already doing. We have started the Polaco Gas Hub, which is a 10,000 hectare facility that will have different businesses around the gas sector.
Okay, thank you. Gas hubs that move gas to industries and factories. That is very brilliant. Honorable Kapakole, one policy, regulatory reform that, if you could implement would accelerate gas-driven industrialization in Africa. Just one.
So mine probably was centered around markets, where those countries that are producing gas can spread out through a wider means within the African markets. And even if this means getting ECOWAS involved at that level where heads of states can come up with a policy that will drive that idea that countries who are producing gas can get a wider market within the ECOWAS region, and also the share of knowledge to countries that are upcoming, like Liberia.
All right, thank you. So gas-producing countries need to get a wider market. How about you, Mr. Akali? Yours will not be policy or regulatory. We want investment.
I think I'll borrow kind of what has already been said around the parks, because I think demand is central. I think for us, when we look at investments, the first question is, do you have your offtake? Everything else becomes an execution problem. But when you're building and hoping that they would come, it's more of a challenge. But when you have the market, it's easier to find partners to solve your problems. So anything really that promotes the markets, be it gas parks, be it making a streamlined process for people to build pipelines to these parks, be it a streamlined process for people to build domestic storage infrastructure such that you can move gas around the country or within the region, for me, that would be top priority.
No, thank you. I mean, they say industrialization usually follows electricity, but now I hear you saying markets and demand first. So just final thoughts. I'll go around my panelists to tell us 20 years from now, what will create more value for Africa? You only get to pick one: exporting more gas or using that gas to power African factories, industrial parks, and manufacturing hubs. And tell us why in 30 seconds. So 20 years from now, looking at the next 20 years, 2046, what will create more value for Africa? Final thoughts. Would it be exporting more gas, or would it be using that gas to power African countries, industrial parks, and manufacturing hubs? 20 years from now.
Where do we
Or
start?
should we do more gas hubs?
So 20 years from now, looking ahead, I think we need more gas for domestic use. And the reason is simple. One, we need gas to support power, delivering reliable electricity to industrial areas, users, and all that. We need gas for infrastructure development. There's no two ways about it. And so we also need gas for our industries. So I think that we need more gas for domestic use to be able to industrialize our countries across West Africa, across the African continent.
All right, thank you. Gas for domestic use, Honorable Kapakole.
More gas to empower industry in Africa, because it's going to produce more jobs, it's going to produce wealth on our continent.
Thank you. And last but not the least, Mr. Alkali.
I'll echo what's already been said. More jobs. When you export the gas, you capture value once. When it feeds industries, it's orders of magnitude more.
Thank you. So if there's anything to take out from here, more gas, more jobs, more industries, and more economic development. Thank you, everyone, for listening. And thank you to our wonderful panelists, for the insights shared. Thank you.
Please, let's give another round of applause to our panelists. So let's also welcome the camera crew for photo optics, please. More gas was the final sentiment that we got there. Ladies and gentlemen, AFNIS Africa 2026. Let's give them another round of applause. Now the conversation continues, and this one is energy integration and green skills, regional power pool and green industrialization. And we take a look at how building the skill passport for inter-country mobility works. Now, ladies and gentlemen, reliable energy is the foundation upon which industries are built, jobs are created, and economies grow. However, it's a known fact that the future of African energy extends beyond national borders. It requires interconnected power systems, a regional cooperation, and workforce equipped with skills needed to drive the green economy. I don't want to say too much. I'll invite first the moderator of this session to go ahead and give us a bit of a background, and then, of course, introduce the panel thereof. Ladies and gentlemen, please help me welcome the moderator for this session, the advocate for governance, energy transition, and national resilience, Miriam Yaro. I think if we can clap, keep the hands clapping until she gets all the way up to the stage. We do believe that this conversation aligns perfectly with AFNIS's vision of creating integrated regional value chains and powering Africa's industrial future through collaboration rather than isolation. Mariam, you're very welcome when you're ready.
Hello. Good afternoon, everyone, and welcome to African Natural Resources and Energy Investment Summit 2026. Distinguished guests and panelists, as we reflect on the insights on energy integration and green skills, it becomes clear that the conversation goes beyond electricity alone. it speaks directly to the broader summit vision of One Africa, One Resource vision. Africa's greatest strength is not only in abundance of its natural resources, but it is the ability to connect those resources across borders for collective prosperity. No single African country can fully industrialize in isolation. Energy systems, skilled labor, markets, infrastructure, and investment ecosystems must increasingly function as interconnected regional assets rather than fragmented national systems. Regional integration is no longer theoretical. Nigeria's formal participation in West African Power Pool represents a practical step towards further where African countries trade power, coordinate infrastructure, and strengthen energy security collectively. The idea behind One Africa, One Resource vision is therefore reflected in three important ways: shared energy infrastructure, shared human capital, shared economic prosperity. Most importantly, this session challenges us to rethink resources beyond minerals and oil only. In the emerging global economy, Africa's greatest resources will increase to include energy connectivity, skilled youth populations, regional cooperation, innovation capacity, green industrial economies. The theme, therefore, aligns perfectly with the message of this session. Africa's future competitiveness depends not only on what resources we possess, but on how effectively we integrate, manage, and share them across borders. As we commence this moderation, the key question before us becomes, how can Africa move forward from fragmented national systems to a truly integrated continental ecosystem for energy, skills, investment, and industrial growth? This is the spirit of One Africa, One Resource vision. With that, it's my honor to welcome our distinguished panelists and commence this important discussion. I can't see. Hello? I want to call them up. Okay. So at this point, can our panelists come up, please? We have Isaac Bolari Waju. Is he there? Hello? Welcome, Mr. Isaac. We have Lanre Shashore. We have Mohamed Jibril. And we have Koko Etim Musa. So I'll just give a brief background about each one of them, and then and the conversation can start. Isaac Bolarinwaju is the CEO of Amfani Limited. Amfani is a clean energy financing and brokerage company focused on helping businesses and productive users access renewable energy solutions through practical financing structures, providing matching project coordination. His relevance to this discussion is that he will bring private sector and project execution perspective. He speaks to how distributed energy projects move customer demand to installation. Marlon Jibril is representing the MD of Rural Electrification Agency. That's the agency central to Nigeria's rural and underserved sorry, excuse me, underserved electrification agency, including mini grids, off-grid renewable energy, and distributed energy access programs. Mohammed will be bringing public sector implementation perspectives. He can speak to how government programs, regulations, partnerships, and public sector strategy can support decentralized energy deployment and rural electrification and market development. We now have Dr. Musa. Dr. Musa is a director with NBTE, National Board for Technical Education. He is responsible for the technical and vocational education standards, accreditation, and quality assurance across Nigeria's technical education system. Dr. Musa brings skills, certification, and workforce development perspective. He's the natural lead for discussing the skills passport, harmonized technical certification, vocational training standards, and cross-border recognition of green skills. You're welcome. So I think I've touched on everybody. Lanre. You're welcome, Lanre. Lanre is Special Advisor on, to Energy Transition Planning Africa Sustainable Energy, which is a UN-backed organization. And Sustainable Energy for All works with governments, the private sector, financial institutions, and development partners to accelerate progress towards universal access to sustainable energy and energy transition goals. Lanre brings continental and energy transition planning perspectives. She can connect Nigerians' experience to broader African priorities, including SDG 7, energy access, climate commitments, regional collaboration, and the need to align energy planning with industrialization. Thank you very much. You're all welcome. So we can now proceed with our... First question I have for the panel is, why is regional energy integration becoming urgent for Nigerian and ECOWAS at this moment? And it's free to anybody to answer. Director, you can answer for us. Should I repeat the question? Or Larry, please go ahead since you put your hand up. Yes, I can. Why is regional energy integration becoming urgent for Nigeria and ECOWAS at this moment?
Thank you so much for the opportunity to join the panel and to participate in AFNIS again this year. It's usually it's a great opportunity to meet all the various actors from different parts of Africa. To your point on the importance of energy integration, I'm sure colleagues who work on energy within Nigeria can speak to this a bit more. But on the SE for All side, we work quite a bit with the African Union and the African Energy Commission. And it's a big goal. It's part of the Agenda 2063, and it's a significant goal for the African Union to ensure that we have infrastructure that is interoperable within regions, and that's why we have the various power pools. We have the West Africa Power Pool, the Southern Africa Power Pool, East Africa, and so on. And really, the vision for the African Union is that we are able to build. Ultimately, our goal is industrialization, economic growth, and jobs. And the vision for the continent is to build significant interoperable grids that can carry significant baseload that will support and drive the continent's ambitions for economic growth and industrialization. And I think Nigeria, at least coming down to the West Africa Power Pool, Nigeria plays a significant role. I know a lot of people colloquially we say things like, "Oh, we sell energy to Niger and Benin." Well, that is really part of. It's a bit of it's rather like a treaty obligation because we've all committed to contributing to the power pool in such a way that we can build economies of scale, share our resources, and drive our economies equally. So I'm going to stop there. Thanks.
Okay, thank you. Okay. So since we've touched a bit on the power, let's talk about the skills a little bit to open up, and then we'll continue with other questions. So, Director, how important is workforce mobility to achieving green industrialization in West Africa?
Yes, thank you very much, everyone. Workforce mobility provides the basis for regulation. For us, in technical vocational education and training, we are concerned with artisan, craftsman, technician, and technologist. That is a technical manpower falling outside the university system. As regulators, our major duty is to first maintain standardization of training institutions or skill training centers, where manpower is certified, qualifications recognized, and so that they can transit the territory of the entire African continent without hindrances. Here, we need to understand there are two focuses to manpower in this case. One, the university produces professional manpower, while for us in the polytechnics and related colleges, we produce what you call technical manpower. And I mentioned the four certifications we offer: the ND, the HND, then the National Skills Qualification. The word national means it's a certified qualification approved and regulated by government, where institutions or skill training centers conduct or carry out such trainings. So wherever they go, as it is today, we received inquiries to confirm Nigerians who are working either in South Africa or in Kenya to confirm their qualifications. So anything we do that tells you the regulation empowers skills mobility by certifying such qualifications and approving the institutions in maintaining quality, skillful, and competent manpower in Nigeria and beyond.
Thank you. But as a follow-up to that, please, I just want to add something. Which sector should be prioritized first under the Green Skills Passport Initiative?
Yes, for us, you can see here we're approaching two issues: mining and related. Then the other one is the green energy. So in our case, we have developed certifications under the mining, petroleum, mineral processing, pipeline, geology, refinery, so many like that. And then if you go to the NSQ, the Nigerian Content Development Board supported us there. That we developed. The NSQ is a related qualifications that allow mobility. But here, let me caution. The direction of the workforce we are targeting means we need to understand that people need skill. Some require to reskill, others want to upskill. So you find the category of the NSQ we have launched and we are offering in most of the Nigerian training skill centers is providing that someone can come, like the TVT that has been demonstrated this afternoon, someone can come with computer science, and then he will go into that, and then he upskill where he is. Somebody can come with no skill. Maybe he studied history, Islamic studies, Christian studies. So he needs skill. So he will require somewhere where he could go as a graduate and then earn something that will give him something to earn a living.
Thank you.
Yes.
Let's move to REA. What are the biggest obstacles preventing West African Power Pool from becoming a fully operational electricity market?
Thank you for the question, but I'm trying to, and I'm struggling to link up REA's role in a more regional structure, the West African Power Pool. I mean, REA does the major task or the major responsibility is improving access in places where electricity hasn't reached. And the major model for that is the off-grid solution. So we're looking at decentralized renewable energy systems and so on. But I mean, if we narrow down this integration, and I was going to say that after Larry had spoken, if we narrow down the integration of energy on a smaller scale in Nigeria, for example, Electricity Act of 2023 started enabling all these small systems of mini grids that REA put within rural communities to start coming into a bigger grid, into the national grid. We're now looking at how do we make these small systems become a problem solver for a country that is struggling with generating electricity, for example. Over the past few years, REA had deployed hundreds of megawatts in isolated systems. We've deployed over close to about 500 mini grids in small and large sizes. I mean, the Electricity Act that could enable REA to plug in the systems into a more national grid could also be replicated into the regional West African power pool, where whatever Nigeria contributes goes into a more regional structure. I mean, when Larry spoke, she said something about an accord between countries. And I think I could remember reading somewhere that our biggest renewable energy power plant, that's I think either Kainji or Shiroro, is on a river and is dammed on a river that passes through regional countries that are neighboring Nigeria. So imagine if they could have dammed this river at a certain maybe state or location within their countries, then that could have prevented some level of supply within the rivers that would aid us in generating electricity. So I think it is very important for us to replicate what we're doing with interconnected mini grids, where private companies are given grants to come and work together with the national grid and the distribution companies to make the electricity in Nigeria even more reliable. Thank you.
So, Ishak, don't feel left out. I'll come to you soon. But there's a question that I want to follow up with Larry here, and is how can federal and state regulators avoid conflict under the new two-tier regulatory structure? How can federal and state regulators avoid conflicts under the two new tier regulatory structure?
So now we've come to talking about our domestic power market and how the new reforms that well, I don't know if they're not so new anymore. At least they're at least 3 years old. The Electricity Act, I think of 2023, and how that is supporting the electricity sector. Well, I think it's quite clear. Everyone who works in the sector knows now that the key reform that the Electricity Act of 2023 brought about was it definitively or comprehensively unbundled or disaggregated the market. It balkanized the electricity market such that subnational entities like state governments and local governments can organize their own electricity markets. So we don't have the centralized market that we had a few years or some years ago, and it's broken it down even further from the unbundling that we had, I think it was in 2015. Now, what that means is that the national regulator then, once a state issues an order to take over its own electricity market, it means that the national regulator no longer has, I suppose, the authority to regulate the state market. So I think the legislation and the orders provide that clarity. There is some overlap where certain historical distribution companies cover more than one state. So there's some difficulty there, and I think states are having to resolve that. So if I take, for example, the Ibadan Distribution Company, there are some business units or some geographical areas that go beyond the confines of Oyo State. They go into Kwara State, for example. So it's actually not quite clear to me how that is being addressed, but I think this is what everybody is learning as the market is unfolding. but I'm going to stop there. I think we don't have a lot of time.
Thank you. So I think our time is nearly up, but we need to touch on finance. So Ishak, if you can help us with how do we finance decentralized energy projects in a way that works for customers and investors?
Thank you very much. It's a pleasure to be at AFNIS once again. So when we speak about finance, people get a little bit jittery because it involves, dollars and cents and naira and kobo. But Haja, going to your question, financing for the benefit of the customer and the financier should not be treated as a two-way solution. It is two different points on the same line. Customers want affordability. Financiers want confidence. Now, how do we achieve both? We are in a situation whereby we paint all the different walls with the same brush. For decentralized energy, particularly speaking, it is critical for us to look at opportunities where you start asking your customers, what are your repayment models? Are you comfortable leasing an energy system, for example? Or are you comfortable being an energy as a service, for example? In terms of payment back, how quickly do you want to pay back? Nigeria is a country of 40 million businesses, so everybody here either owns a business or knows someone that owns a business. As a result of that, you have situations whereby there are peaks and troughs in terms of how you get revenue as a customer. As the financier, consider that when it comes to financing. Now, on the financier side, the confidence that the financier needs is data, right? If I'm a bank or a DFI or an MFI, as the case may be, the question I'm asking is this: how confident am I as a financier to finance decentralized energy for a customer? And the driver for that is this: what's the customer data? What KYC have you done? What are the front-end engineering you've done for a mini-grid project, for example? What are the customer data you've assembled together? What are the community engagements you've put together? What are the business models you've put together? Financiers have the funding, they want to spend it, but they need to also have that level of confidence in them. So the summary of that answer is, let's put those two things. I'm an engineer, so let's put those two things in series and not, no, I take that back. Let's put them in parallel and not in series, right? Let's have a situation whereby we are getting the customers to speak to the financiers and vice versa. Once that middle point is complete, I think there is going to be a very seamless transition between financing and energy supply.
Thank you. So I think our time is up, and I think what we're getting from this conversation is that for Africa's green industrialization, for the integration to succeed, we need power integration, financial integration, and skills mobility. And if we have all this in place, we can have job creation, industrialization, and regional economic development. Thank you.
Thank you.
Please a round of applause for this team. Very, very engaging, although the time was short, but of course, so many takeaways. Thank you so much to the moderator, Mariam Yaro, Larry Shashere, good to see you. Ishak Bolariwa, always a moderator, now a panelist. Fantastic. Please, photograph session before you step down. Photograph, please. The camera captures a moment. History remembers the impact. Beautiful to see. Well done. Today's photograph is indeed tomorrow's legacy. And this would remind us of AFNIS 2026. Thank you so much to the team, the moderator and the panelists. Please, another round of applause for them. Well done. Good job. It's important to mention that reliable energy unlocks productivity, innovation, and prosperity. And for any sector to thrive, we must get that right in any part of the world, whether Nigeria, whether Uganda, Kenya, just name it. We'll move on to the next item on the agenda. And the next item is a conversation. And great opportunities rarely arrive alone. They come disguised as conversations. And also, some of the most valuable insights come from authentic, or if you like, true, real conversations. And that's what we're about to have now. It's going to be for 5 minutes. It's a CEO fireside chat. And this will be done by Patrick Mulindwa Lubega, the Chief of Staff and CEO, Africa Responsible Minerals Sourcing Initiative. Please, a round of applause for Patrick as he steps forward. He's the interviewer. He's going to be interviewing Abubakar Omar Sadiq, MNI, the Managing Director, Steron Mining Company Limited. Yes, please make the applause louder as they come forward. By the way, Steron did a signing earlier today. So yes, they're ready for business and ready to move to the next stage. Let's listen to this MD quickly. Patrick, please, you have 5 minutes. Yes. Thank you.
Okay, thank you so much. Good afternoon to everyone. Very good afternoon to everyone. It's, you need to help me because the worst is when I have to ask my boss to respond to my message, to my greeting anyway. Yeah, so thank you so much. The MC already mentioned my names. My name is Patrick Mulindwa. I'm Chief of Staff, Africa Mineral Strategy Group. Also double there as the CEO of the Africa Responsible Mineral Sourcing Initiative. By this time, I think you're almost choking on so much information. But either way, who said the human brain has got a limit? Does anyone know the elasticity of the human brain? Okay. Anyways, I wish to appreciate you for the time you've spent here, and we'll only spend 5 minutes with this wonderful CEO of Nigeria, a Nigerian CEO born here and raised here, traveled the world, and he came back to do magic here. And his name is Abubakar Sadiq Omar, and he's a managing director, CEO of Steron Mining Company Limited. Please, just make him feel good. Yes! He looks young for what he's doing, and I remember then we never had, African CEOs of mining companies. Anyways,
True.
By this time, Omar, I would like to ask you kindly to just briefly tell us about yourself and what are you doing with your company. And then I'll ask you just one question to which you will provide an answer. First, you will basically tell us whether the challenges or the problems that I'll mention in the question are real. You highlight, and then we'll go into what you think has to be done. So briefly about you and your company.
Thank you very much. Many thanks and gratitude to AFNIS for this opportunity. I am Abubakar Sadiq Omar, MNI, the Managing Director of Steron Mining Company. I am a chartered building engineer by profession. My passion in mining came from a reality, which we set out to produce granite so that we could manufacture building materials, concrete elements, trapezoidal drains for infrastructure. However, we realized that was not in the jurisdiction of construction. To get granite itself, you had to step outside the construction industry to go into the mining field to extract the granite. And to our greatest surprise, we found lots of gems hidden in the rocks that were hiding in plain sight everywhere around us. Steron Mining currently has given birth to Steron Energy because we are known as Africans to be a great source of minerals. But one thing we keep forgetting, and nobody resonates, is that we're one of the largest markets in the world. We do not need to sell to anyone. We can consume everything, and we even need everything we produce. Yeah, but this is currently where we are now, Steron Energy.
There's something you mentioned, we are not just producers of raw material. We could be as well, the first market. Isn't that how China grew?
Exactly.
Whatever they produced, they consumed. So, Abubakar, by this time, quite a number of conversations have happened. There were conversations at the ministerial roundtable. There have been panels here. There have been presentations here. And me and you somewhere agreed that why don't we pull out a question of a case of an African miner like you. You went into construction, But then the process for you to get the materials you needed pushed you into a mining company.
True.
You seized the opportunity. It has become costly. It has become costly to actually realize. I want to ask you a question for you to provide a little bit of the real answers. What are the real challenges as you, an African local miner in Nigeria, that you've faced? Some of them you told me. Now I want you to tell the people in the audience.
One of the major challenges as a local miner in Africa, and I'll speak from my perspective as a Nigerian, is the global double standard. The same minerals we produce are not valued the same way, except it's owned by someone else. For instance, there isn't any London Metal Exchange warehouse in Africa. That does not mean...
Can you keep it there? Is he lying, or there's one that was opened yesterday and we don't know? Wow.
Which means that there isn't a gram of mineral that is born out of this continent that is seen as a standard mineral in the world. So we would always be paid shillings and naira for our minerals that are sold for the top dollar in the world, so long as they are owned by a foreigner.
On the same case of double standards on that, what could be the solution on warehouse?
I think it's up to the parents of the bride to set the bride price.
Okay. So then African Mineral Strategy Group and the government? Well, okay. Oh, man. Do you want a goat? Or you want a cow for your girl? For your daughter, right?
Lobola. So the thing is,
Yes.
we urge the African Mineral Strategy Group
Yes.
to own its satellite. Because this is a very crucial time in the life of Africans. And the genre of professionals or people that are daring to go into this field know that it's almost impossible to go into every mining site to quantify it. The banks don't even see your mining titles as assets. They do not invest. They will not invest in your site.
The previous panel was saying, I think one of them said the banks, the financials are looking for accurate data. And Abubakar is saying that even at a point where you provide them accurate data, there are more questions.
Now, there are technology available to the world, unique and maybe expensive to an individual, but not to a group like AMSG. It's called nuclear magnetic resonance. It's able to identify the minerals and quantify it using a superimposed 3D modeling. And that way, there's a high possibility that you can quantify the minerals on a site without putting boots on ground. How safe are our sites, realistically? So every other person in this crowd who own a mining title that have seen occurrences of minerals but are still going through hell trying to get other people to believe it. And they cannot extract this thing themselves. So if you can deploy the satellite as AMSG, and you can set the pricing as Africans for ourselves, we get messages quarterly about what the price of our minerals would be by
LME.
Not LME.
Currently now you're getting it. LME has to determine the price of
we wish they could, LME could the world could buy our minerals at LME rates. Every African that is into mining would be well off, by all means. But I think to a large extent,
yes, we own the commodity. The market is owned by somebody, and he determines the price.
Exactly, and they even determine the price by the local currency, which is highly subject to fluctuations. So AMSG can lead by owning its satellites and deploying that technology, and also fixing pricing. No one should come to Africa and tell us what the prices of our minerals are. I think we should take charge of that in the first place.
What does he deserve? A round of applause. We said 5 minutes, we'll keep it there, and I think we're about asking our last question. You talked about price volatility.
Yes.
What exactly did you mean, and what could be the solution to that? Because, I mean, I don't know if you're doing gold, but sorry, I don't know if you're doing gold, but every one of us is always looking at on those platforms, either the London, the LME, of course, LBMA, to check on the gold prices. So it's, oh, in the morning, what is the LBMA price? That is nothing like, what is the Nigeria price?
Yes.
What is the AMSG price? Okay?
That is really what we believe AMSG should do. We could mop up all the minerals available to average miners that are willing to sell, and you warehouse it. It doesn't change the fact that we ought to still follow the LME standard of warehouse and those standardizations, right, of how to warehouse the minerals. But every miner can have the confidence, can borrow that confidence knowing that somebody would buy their minerals at a top dollar rate in a cluster. And that's AMSG can now trade with the world. So AMSG ought to have its satellite and have its standard warehousing.
Can we clap for that? Because the AMSG warehouses, you could plug one in, let's say if you're doing, and they're doing everything. So you're doing lithium, you're doing all the high valued, you're doing the highly demanded cobalt, you have a new demand for copper because you have so much data centers and the AIs.
So to interrupt you, mining and minerals mean different things, relative. It's not the same thing for everyone. We tried gold in New York for a while. We knocked on doors, but we came back very broke. Right? It was gold, and nobody could touch us because we were Nigerian.
Yeah.
But after same us, after 3 years,
I love the other one, untouchable.
But after 3 years,
yes,
there was a state of emergency on minerals in the US, and they came here for different thing, for lithium. So I think we can identify what is low-hanging fruits and what is high value, low volume, high value things. You know. So these things are all relative to the people.
Thank you so much, Abubakar, and I would like the audience, please, to clap for Abubakar. I see Excalibur is speaking to my boss. Abubakar, you must have said something about satellites. These are the exploration giants. Anyways, you've told him what we need. So, ladies and gentlemen, thank you so much for basically being a great audience. Any last word for them?
The future is now, and it's all in your hands, Africa. The future is now, and it's in your hands.
Thank you, ladies and gentlemen.
Give them another round of applause. I'll welcome the photographers for the photo optics. The future of Africa is now. That's the Managing Director, Steron Mining Company Limited, Abubakar Omar Sadiq. Also, of course, the moderator for that session, the Chief of Staff and CEO of Africa Responsible Minerals Sourcing Initiative, Patrick Mulindwa. Ladies and gentlemen, you are still with us at the AFNIS the 2026. Now, before I move on with the agenda, I'd also like to recognize the Professor Pascal Oguno, the law professor at Anambra State University. He joined us while the conversations were ongoing. You're very welcome. Now we move from there, catalyzing One Africa through integrated resource financing. A recurring theme throughout AFNIS 2026 has been the need for Africans to finance Africa. And today's panel session explores how domestic capital, institutional investors, blended finance structures, and innovative risk management mechanisms can help unlock large-scale development opportunities. I'll first bring to the stage the moderator for this session, who will then in turn bring up his panel. Moderators, please work with us, 25 minutes per session, no more, no less. Thank you very much. Ladies and gentlemen, please help me bring the CEO, African Leadership Magazine, Dr. Ken Giami, as the moderator for this session. Let's give him a round of applause as he comes to the front. Catalyzing One Africa through integrated resource finance. If we clap a bit more, he'll definitely make his way to the stage.
Your Excellencies, distinguished ladies and gentlemen, our esteemed speakers, honored guests, good afternoon. My name is Ehi Sajiri. I'm the Group General Manager for African Leadership Organization. I'm representing my boss, Dr. Ken Giami, the CEO of the African Leadership Organization, who is on a very important assignment. And I'm very delighted to moderate this important conversation. Our conversation today is titled Catalyzing One Africa Through Integrated Resource Finance, Africa Financing Africa. Permit me to begin with 3 numbers that frame this conversation. First, Africa holds 30% of the world's mineral resources, mineral reserves, including many of the critical minerals required for the global energy transition. Yet the continent still captures only a fraction of the value generated from this resource because much of our minerals continue to leave Africa in raw form. Secondly, according to United Nations and other multilateral institutions, Africa mobilizes more than $900 billion annually through domestic savings, pension assets, public revenues, and other internal resources. These capital exists on the continent. Third, Africa loses an estimated $88.6 billion annually through illicit financial flows and capital leakages, much of it linked to the extractive sector. The challenge before us, therefore, is not simply one of capital scarcity. Rather, it is about building the financial architecture, institutions, and partnerships required to mobilize Africa's capital for African industrialization. This is precisely the ambition. So the question now is, how do we unlock patient capital? How do we de-risk investment? How do we finance beneficiation and regional value chains? And how do we ensure that Africa's natural resources create jobs, industries, and prosperity on the African soil? Today, we explore how to pool. During this session, we are going to explore how to pool domestic institutional liquidity, finance regional beneficiation hubs, and build integrated capital markets capable of supporting Africa's industrial transformation. To help unpack these issues, I'm joined by an exceptional panel of experts. Please help me welcome Ms. Janelle Duplessis, the Managing Director, Launch Africa Capital and Africa Financing Africa Mutual Fund. She's a leading African venture capitalist and co-managing partner of Launch Africa Capital, one of Africa's most active early-stage investment platforms. Also here with me is, also being invited to the stage is Alhaji Hassan Usman, who is the founder and managing director of New Frontier Development Limited. I also have with me Mr. Dayabu Huma Kofil, is the director of the Derivatives, Commodities, and Risk Management Department that's the last at Nigeria's Security and Exchange Commission. Also being invited is Ms. Molebogeng Manzibuko. Please forgive me if I didn't get the name correctly. She's an associate vice president and mining lead within the investment division of African Finance Corporation. She's responsible for shaping and executing AFC's mining investment strategy across Africa, focusing on financing infrastructure and sustainable development within the mining sector. With me also is Ms. Hawa Nana Ibrahim, who is the group director responsible for non-tax revenue in Nigeria, where she oversees strategies aimed at enhancing government revenue generation beyond traditional tax sources. And also with me is Mr. Kevin Chimaya, who is the COO of Romunus Mining. Thank you, you're welcome. I'm representing you. Okay, thank you. Okay, so let me begin with the governance and the policy environment, because capital ultimately flows where there is confidence. So I'll begin with Ms. I don't think she's here. So we'll go to, let's go by Ms. Awa. Is she here? Represented. So the panelist 2 is Alaji Hassan, MT Usman. So Alaji, Africa, my first question is, how do we unlock pension money for mining and infrastructure? And we understand that African pension funds collectively manage enormous pool of capital, yet much of these assets remain concentrated on low-risk government securities. So in your view, what guarantees structures, financial innovations, or policy reforms are required to unlock a greater share of these assets for long-term resource infrastructure?
Good afternoon. I think first and foremost, just to recognize that pension funds want to ensure that there are enough returns, there's enough liquidity at the end of the day for their pension investors. So one has to design mechanisms that will, from get-go, ensure that there are steady returns and that funds are safe. So in my opinion, we need to look at how to create guarantee mechanisms. I know that we have, for example, the the Afrexim Partial Risk Guarantee. We have MIGA from World Bank, but they have not moved aggressively enough. We need to look at creating, for example, an Africa Infrastructure Guarantee Facility or fund, which could be backed by sovereign wealth funds, DFIs such as AFCs, the Afrexims, and so on, and even multilateral bodies. That guarantee fund would be able to provide the credit enhancements that investors want to see. Somebody wants to invest in a long-term project. It may be a railway project in Angola, or it's an airport in Sierra Leone or something. They want to know their funds are safe. If you have a guarantee mechanism, such as what I'm talking about, it makes it a bit easier for the pension funds to come in and to invest in it and take a long-term perspective. Of course, pension funds can sit out for 20, 30 years or so, but without adequate assurance that what they put in will come back, they'll not invest their money. So I think having that kind of guarantee facility will help. It will basically provide maybe like a first loss. So that facility is saying to potential investors, come in and put your money. The first 20 or 30%, if it goes bad, we will suffer that loss. Beyond that, it'll be up to the investor. So that's number one. Number two, we need to also relax our rules a bit more. And not just Nigeria, I think across the continent, you find that a lot of administrators of, not administrators, regulators of pensions have a home bias. Everybody wants to have their pension funds mobilized to invest in their own markets. Infrastructure, by its very nature, requires a lot of funding. In most African countries, you can't assemble that kind of pool of money locally. It has to be through cross-border support. So we have to go beyond that home bias and open up our markets and make sure that if somebody wants to raise money in Cameroon, provided they meet certain criteria, a Nigerian fund can invest in it, a Kenyan fund can invest in it, a Zimbabwean fund can invest in it. No one party right now can put down, say, a check of $500 million for an infrastructure project. But if you have such collaboration, you can then mobilize pension funds across the continent. The last I read, we have well over $1.5 trillion of pension assets across Africa, invested primarily in foreign securities that have very low return. So by creating a guarantee facility or expanding what we have right now, by moving away from this home bias, where regulators open up markets a bit more, we can ensure that pension funds will invest in projects across the continent where they will get better returns, where their funds are assured, and where at the end of the day, the continent as a whole will benefit from those flows. So that's what I think we need to look at.
Thank you very much. Mr. Janet, Ms. Janet Douglas, I think you're presented. Many domestic investors still perceive mining as an ultra high-risk, long gestation sector. How do we convince Africans that mining is investable?
Yeah, it's a challenge because mining is obviously a long investment gestation period, and at the very early stage, very high risk. And to agree with my fellow panelists, you need to start thinking about how do we stack capital in order to de-risk it for investors. I also think that we are so equity dependent, and maybe there's a shift to re-look at equity and maybe start selling mining cash flows, which in any investor's mind, when an investor thinks of investment, is how do I de-risk this project? And cash is always king. And so existing models needs to be reshaped in order for us to attract more capital. Some of the examples that I think needs to be introduced are blended finance models that was just mentioned. DFIs providing the guarantees with the first loss tranche, the pension funds then build on top of it, and we start stacking pension funds, institutional funds, private capital, and then sort of retail capital. If you can look through that, you start de-risking products. If you also de-risk, instead of looking at mines, but start selling investors a portfolio or a corridor of investors. And that requires that there's cross-border similarities regarding policies, regarding local participation, regarding revenue sharing opportunities. These are all factors that will drive de-risking products, de-risking projects, and attract more capital. Secondly, I think that we should leverage offtake that is existing in mines. Creating production-linked facilities instead of investors waiting for the end of an investment period. We should try to return capital during an investment period because we know as investors more capital attracts capital. I also believe that we should work with the pension funds to the point that was just made. Trillions of dollars exist in pension funds, and if you just take 1% of that, would be about $30 billion, a third of the total annual infrastructure and mining requirements for the continent. If we are able to either provide listed products on the exchanges which attracts more capital, instead of the current model, which is to the point that was made, investing in foreign assets where the capital is then moved abroad, the returns are moved abroad and not stay within the continent. I think that the existing models are great because it got us here, but for us to attract more capital into the future, we will have to think about how reshaping this. And that should be blended models using not the investment period, but a cash flow based model in order to attract different types of investors into different levels of an investment, whether it's senior debt, equity, mezzanine financing, or just short term to get you through the development phase. And then we need to use offtake as a production link facility in order to drive more capital to in there. There are many models out there. There's also tax incentives. If you look at how Canada allows tax incentives for exploration, it is what is driving the junior mining sector in Canada. We should literally just copy and paste some of the models that exist globally and adapt it for the environment. If it happened in other markets, surely a similar model adopted for the African continent could be adopted and easily implemented if we all work together with the regulators, the central banks, and the financiers. And then finally, I think that it requires that you have the right talent, and so we also need to be able to create a generation of mining financiers that have understanding of how global models work and bring this new innovation into this industry.
Thank you very much. Mr. Kevin, from an operational perspective, why do many companies fail to seek the capital they require?
Thank you very much. There are two key things that financing institutions look for. number one, a project must show evidence that the mineral deposit that needs to be financed is actually there. Quality assurance should also be implemented from the start of the project up until the very end. Now, many projects in Africa, they lack this approach, and where there is no auditable evidence in terms of data, in terms of drill cores and exploration outputs, then those projects fail to get the required finances that are needed. And also, it's vital that all projects that are looking for finance must have reports that are code compliant. Now, these reports follow a set of standards that financiers and investors look out for. So if a project hasn't got these in place, then it becomes increasingly difficult to get the finance.
Thank you very much. Why aren't African institutions funding beneficiation infrastructure?
Thank you very much. In terms of why, you see limited capital going into the beneficiation infrastructure. I mean, largely, let's go back to the fundamentals.
Yes.
Firstly, anything that has to do with infrastructure, to unlock, the diverse set of pools of capital from day one. Yes. One needs to, it needs to be done in a manner in which, an ecosystem is being developed, right? So building a beneficiation plant, you need the power. At the end of the day, you need as well, logistics to get the raw material to the plant, as well as even the feedstock itself from the upstream component of things. So looking at it in isolation would make the conversation harder. For example, I know, pension funds were mentioned earlier. That's in the Nigerian context, that's an over 27 trillion naira, capital pool that can potentially be channeled into infrastructure. But this is people's retirement money at the end of the day, you and I. And there's also a limit to the type of risks, that would appeal to those sort of institutions. So there's also an inherent level of de-risking that will go, when projects are developed, underpinned by an ecosystem investment philosophy, because you're really creating the value chain. De-risking, one segment de-risks the other as well. So that's one fundamental area in which, we need to give a lot of thought to. Such projects cannot be built in isolation. Thank you.
Thank you very much. Mr. Janadin, traditional venture capital and private equity models often seek relatively short-term exits, whereas mining projects can take many years to mature. So how do we keep investors patient during this long mining cycle?
Yeah, I think the model is wrong. I mean, I run an investment fund. We are forced into this 10-year model and return capital at the end of 10 years. But if you think that mining is obviously long-term, so our new fund, the Africans for Africa Mining Fund, is actually a 15-year fund. Finding investors that have much more patient capital, ironically, that's more the timeline of pension funds, is difficult. And so what we're trying to do is force a mining operations into a model that is liquid still at 10 years. And so we have to really seriously think about how do we create models that fit the timeline of the mine development life rather than the investor's expectation. And that tension is going to exist there until we have as we said, until we have the layered or blended finance approach in order to do that. I think that international investors like to see models that generate cash at various stages. So if you look at a fund life, there's the mining fund life. There's 5 to 7 years of development, exploration, there are certain investors that will come in there, but if we can find a structure or an instrument that allows them to offload some of that liquidity at that stage, then we are able to attract a diversified set of investors with different time frames, but we need to have the correct wrapper, so the correct fund, in order to allow exits at the right time for different investors. That exists in some markets, but I've not seen that model in the African continent. And what we are trying to do with the Africa's mining fund is to introduce this new model so that other business models are able to replicate what we are trying to do. The one thing that we know is from looking at other more developed markets is if you can prove that environmental and social conditions are met, if you can prove that your post-mine life can be rehabilitated, that you're looking after the communities over a very long period of time, investors are more comfortable that you are de-risking the project, not based on only on how you operate what extract from the ground, but also how the entire mine development's life cycle is facilitated. I think models that I've seen that works is also allowing different investors, different access to yields, offtake, and the ability to de-risk through tax incentives and early exit mechanisms. So I think that investors must come together at forums like AFNIS, and we should have the ability to engage with pension funds, with institutional investors, in order to plan a model that works for Africa. 15 years, in reality, is still a very short space of time. And I think these models should be more around 20 to 30 years, because then it allows for the proper exploration and the development of the mine that is funded throughout the mining life. Funds like ours, we break out our investment strategy into 3 phases. One, to capture early development, so pre-DFS, pre the feasibility studies, and the majority is operating mines, and then to support mining infrastructure and mining processes beneficiation as well. So we, in order to return our capital without being able to be too disruptive to the existing, the way that these funds are run, but also to satisfy investor requirements, our investment strategy is developed across 3 stages in order to yield capital for us at various stages over the 15 years. That in itself is quite a lot of innovation, but I think the industry together should collaborate to provide a much longer, more patient financing model for Africa.
Thank you very much. Alaji, I would like to hear your thoughts also on this, but from the aspect of what are the most common mistakes project developers make when they're approaching institutional investors for long-term financing?
So I think there's some very common mistakes, and I think it's really in the project preparation. It's no use just simply having an idea, putting up a concept, doing a PowerPoint, and then going to your banker or to your advisor and say, okay, I need to get money. There's a science almost behind it. Yeah, there's a structure. You need to do a feasibility study. You have to do an environmental and social impact assessment. You must have a financial model that's been audited. Yeah, all these things are necessary before you get to the point of saying, look, I want to get money, because money follows structure. It doesn't just come by itself. If you have something that is structured and that can give you a return, the money will come after it. So to attract the capital, you have to have the right structure. And what I find is time and time again, people come up with propositions. It's a fancy concept. It looks like on the face of it, it'll make some money, and then you want someone to fund you on the back of that. It won't happen. There has to be a detailed piece of work. If you're doing infrastructure, for example, I would say to anybody starting off, take your time. Take about 6 months minimum, probably not about 12 months, to do that preparatory work. Because in the project development work, that will assure you success in your fundraising. Without that work being put in at the beginning, without these things being addressed, people want to know, what returns will I get? Who is buying what you're producing? Yeah? Have you got the certifications environmentally and so on and so forth? If you have done all these things upfront in your planning, I'm certain you get the money at the end of the day. So for me, the biggest mistake that people make is not doing enough at the project preparation stage. Thank you.
Thank you very much. Mr. Kevin, if you could recommend one policy or institutional reform that could immediately improve investment flow from African mining, what would it be?
Thank you very much. Looking at what has been discussed at this AFNI summit, I think there is common consensus that Africa needs to move in one direction. So I would love to see African governments combine efforts and come up with what I would call commodity corridors. For instance, the Central African region, DRC, Zambia, have got abundant copper. So we could have a copper corridor in Central Africa. And then we have lithium in Nigeria, in other parts of West Africa, and also lithium in Zimbabwe, parts of DRC and Rwanda as well. So we could have a lithium corridor. And energy also, we look at the power pools, Southern African pool, West African pool, and then these can now be interconnected, and the finance institutions can also work collaboratively by financing these corridors. Thank you.
Thank you very much. I think our time is up, so thank you very much.
A round of applause for
Thank you
them.
your time.
Thank you very much. Let's have a photograph now. Thank you, Dr. Ken Giami and the panelists. You have done justice to the topic of this session. Indeed, capital is the fuel of development, and this session explored innovative ways Africans can finance African projects and accelerate industrial growth. Another round of applause for them. Thank you very much for the insightful conversation and, of course, the ideas that has been passed. Thank you. Yes, that handshake seals the conversation, of course. Thank you, gentlemen. All right. If you have a copy of the agenda, you will know we are almost home on day 2 of AFNIS 2026 as we talk about One Africa, One Resource Vision. If you have enjoyed yourself so far, give your neighbor a high five. Oh, you don't have a neighbor? Secretary General. Okay, so take it. All right. If you have enjoyed yourself and you're glad that you attended AFNIS, turn to the next person and say something that you're taking away. What you're taking away. Yes. Yes, interesting. I have so much takeaways from this particular summit. And the Secretary General, of course, I know that you had a great time. Away from the pepper soup, by the way, which you enjoyed again in Nigeria. Yes, so much to be celebrated as far as this year's AFNIS is concerned. So, like I said, we're almost home. We have one more panel session, and then would conclude day 2 of AFNIS 2026. Now, this session is on regional project pipeline and de-risking. It's a very detailed session. I think everyone wants to pay attention to this. And it's important we talk about this because we need to look at how we can turn ideas into bankable projects, which require strategy, innovation, and collaboration. And I'm sure that's all you'll be getting from this panel discussion as it focuses on practical pathways to de-risk regional investments. Ladies and gentlemen, please put your hands together as we welcome our moderator, Archibald Troko, Director, Marketing and Partnerships at Core International. Please, a round of applause for Archibald as he comes forward. He's going to introduce his panelists, and he has just 25 minutes. I hope he keeps the time because, I mean, he always, says other sessions should round off. He gives the time, so it's your turn to stick to the time. Yes. So thank you so much. There's another round of applause for Archibald.
Good afternoon, everybody. We're still here, just about. I'd like to thank you all for your time and your attention and your support for AFNIS over these past 5 years. I can tell you, as one of the people who's been involved in this from the get-go, it's not easy, and sometimes you're not sure if your ideas or what you're trying to do will get the necessary support to move things forward. But we've been really encouraged and strengthened by the development and the slew of support that we find across the continent. So thank you all again from the bottom of my heart, from Core International, and everyone who makes this possible for your continued support and for your attention today. My role within Core International in terms of the organization of these things, but quite one of the most interesting things is how do we make these projects that we develop for our partner nations and commercial partners, how do we make these things bankable? So we know that one thing about Africa is that we're not short on resources. We're just short of bankable projects, as the last few panelists touched upon. That gap, right, between what we know is in the ground and what investors are going to finance is what this session is about. So on this panel, we have regulators, we have DFI specialists, we have a geoscience director, and project developers. And between them, they represent every single stage of the journey from the discovery to the deal. The question we're going to ask today are the same ones institutional investors ask before they commit capital. Where are the credible projects? Who backs the data? What structures protect my investment? And what happens if things go wrong? By the end of the session, we want to leave every investor, government official, and developer in this room with a clearer picture of what it actually takes to move the African resource opportunities from potential to pipeline. So the first person I would like to sort of introduce onto the stage is Aku Okolo, who is the Director of Planning, Research and Strategy at the Infrastructure Concession Regulatory Commission, the Office of the Presidency. Thank you. Can we give him please a round of applause as he comes up? Now, Aku leads planning and strategy at Nigeria's Infrastructure Concession Regulatory Commission, and that body is responsible for shaping how government assets are opened up to private investment. He works at the point where public ambition meets private capital, helping design the frameworks that make large infrastructure deals happen. So his role is to ensure that when a government decides it wants a port, a railway, or a power system is built, the structure around that decision is solid enough for a serious investor to say yes. The second panelist I would like to introduce is the technical assistant to the executive secretary for the Solid Mineral Development Fund, and that is Abdul Majid Amusa. Are you around? Hello? Is Abdul Majid here? Oh, okay. We have Dr. Julius. I'll come back to Abdul Majid. I have seen him. So, yeah. But anyway, let's look at Dr. Julius Bajabuhu Kwache, who is the Director of National Geosciences Information Center in Nigeria. Can we give him a round of applause as he comes up on the stage? Now, while he's coming up, I'd like to say Dr. Julius leads Nigeria's National Geosciences Information Center, the institution that is responsible for generating, holding, and sharing geological data that underpins investment decisions across the country's mineral sector. So before any company drills, before any government awards a license, before any investor commits capital, someone has to know what's on the ground, and that's his domain. He's directly engaged with the continental push towards standardizing and certified geosciences across Africa through frameworks such as AMARIC and PARC. So thank you, Dr. Julius. And I think we have Abdul Majid as well, so yeah, hi. Again, technical assistant to the executive secretary, Solid Mineral Development Fund. Abdul Majid works at the heart of Nigeria's effort to close the gap between mineral potential and investment-ready projects. The Solid Minerals Development Fund exists because good geology does not attract capital. right? Projects need preparation, data, and often early public support before private investors will step in. So his work is more about understanding where that gap is largest, where targeted government backing can trigger the broader investment that follows. Thank you, gentlemen. We'll begin shortly. Right, so I think the first question, and this is open, the floor is open to all three of you, this question. So as I mentioned, Africa has no shortage of resources. Converting that opportunity, though, into a project that global investors will finance remains the serious challenge. In one sentence, what do you think, or let's say opening question, but what is the single biggest barrier that you believe is standing in the way? And that, I'll start with Abdulmajid.
Okay, so good afternoon, everyone. It's a pleasure to be here. The single, one sentence, a barrier to why we can't close the gap between fundability and project readiness. I think in my own country, there is something that's happened to us that we're really attracted to taking shortcuts. I think that need to move too quick to achieve something you're not sure of, I think that hinders the ability for project developers to actually just be patient and follow that project development life cycle as it should. It's not even about any global standard. Just put yourself in the shoes of who you want to invest in your project. Just what would give you the confidence that you want to give them, you know?
Thank you. And Doctor?
All right, thank you very much. It's my pleasure to be here. In geosciences, I think the major gap is geoscience data acceptability. That's the major gap. Because if your data is not accepted, if your data is not trusted, then that gap is there between you and the DFIs. So that is a major one.
Okay, thank you. And finally.
Okay, so I think from my end, I think it's because lack of bankable projects. Nobody funds an idea. An idea must be developed into a project. And so lack of properly prepared projects is for me, one of the major projects.
And I think that's something that was mentioned in the previous panel, where it's like we're taking shortcuts to get, and maybe that's for political expediency or whatever the necessary reason is. But one of the things we need to do is take our time to develop these things, because we know that a mine may not take 2-3 years, or with a political cycle that could take up to 20 years to start producing, but the impact for the community will be felt for multiple generations. Wouldn't you be that would be a fair summary of some of the things that we're agreeing on?
True.
Yeah. True. Okay, so I'll start at the end actually, from the Commission's point of view as well. PPP structures and enabling infrastructure. So that's what we're going to try and sort of look at. Mineral corridors need more than mines. They need railways and ports. Okay. I guess the question is, governments can't fund these alone. So what kind of PPP structures are we looking at? And what do essentially what do investors want to see? What can we create that you think that would help speed this process up?
Okay, I think what investors would like to see is predictability. Predictability, they would like to see rule of law, which we have today. This current government, as we know, the president today has not cancelled any contract since he came on board. So that's to show that there is some kind of stability in terms of rule of law. They also like to know that they can get their money back as well. That risk also needs to be adequately structured for them to be able to bear the risk that they are capable of doing.
Okay, that's good to know. Good start there. From the geosciences perspective, I think one of the big issues that I know from my perspective that I have as well is how do we then strengthen the geological data for investors, right? We struggle with verifiable data all over the continent. So I guess what concrete steps is the Geosciences, the organization, taking to make Nigeria's geoscience information more credible? And how are we looking at standardizing that across the continent, or especially within Nigeria, and how can we do that further across the continent?
Okay, yeah, thank you very much. In NGSA, we have structured our data generation, which is in line with best global practices. You see, the issue and data acceptability most of the time is how credible is the data? Has the right thing been done? How was it done? We in NGSA, we do what we call integrated data generation. We don't depend on one method to generate our data. We integrate our data. And that is why NGSA is full of professionals in every field. When we go to the field, what we do first of all is to carry out what we call regional geologic mapping. Now, this entails how you look at the rocks, because you have different kinds of lithologies, different kinds of rocks. And all these rocks speak different languages. They don't speak the same language. And all of them host different kinds of minerals. So what you do first of all is to do geological mapping. Then after that, you come back and you look at the report, you look at what you have done, you carry out your analysis. You go back again for what we call detailed exploration. Now this one, you integrate your physical data, you do your geochemical mapping, you do your structural mapping, everything. So you keep generating and building up this data until it reaches the state that is ready for presentation. So we carry out all the analysis, everything, we don't leave anything behind. So that is what we do in NGSA. Geology speaks the same language all over. The same geology, the same kind of rocks we see here, is the same kind of rocks we see in other places. So we also try to relate it to our neighbors, to the neighboring countries. How is their own geology? There was a time the NGSA carried out what we call the northeast-southeast border axis mapping along our boundaries with Cameroon. We integrate, we interchange data. What have they observed at the other end? What is happening at this our own end? Is it the same? So we do all those things in geological survey. And at the end of it all, what we want to achieve is that to have a credible data that we can present it anywhere. So that is basically what we do at NGSA. And we did that across all other, it's not even geotechnical, even in marine, you understand, even geohazard. So we generate all what it takes to be what is called geoscience data. We generate all this data at NGSA. And also we domicile this data with us. It's there with us so that investors can come around and look at the data. So that's what we do.
Okay, that's great. Thank you. Yeah, thank you. We can generate some applause there. So I think we kind of sort of started to track a bit of a path here now as to what do we need at each stage. Now, in terms of, I guess the next question for you, Abdul Majid, is what, in your opinion, or within the SMDF's opinion, what makes a project bankable, right? We've got so many promising mineral assets, on the continent, but hardly any of them actually get produced to production. So what do you think, from your experience, what does the project actually need beyond good geology, serious institutional investor, and so on and so forth? What is the thing that we need to make people convinced that they're going to invest $500 million, $1 billion into a project like this?
Thank you very much. I will just follow from what my big brother has just said. So a bankable project starts with credible geological data, definitely. And then you have to report it in a way that is globally understandable. And it also requires, beyond that, some other technical studies. For example, understanding the environment, understanding the mining engineering technique, the general scope of work on how to win the material, and so on. A sound, environmental, social, and governance practice, infrastructure planning, because it's beyond just where the resource is how can the resource efficiently come out and get to the market in a way that remains competitive. There's also regulatory clarity, which we've also made a lot of progress, on. And finally, a clear commercial pathway, exactly like I said, how does it get to the port and to where it's needed the most in the quality and the version that fetches you the best value. This should all be part of what makes that project credible and better than the other project, because every time you're presenting your project to anyone, that is not the only option in front of the investor. There are options. So what you want is for whatever you're presenting to actually be the best among equals, So at SMDF, our role, has always been to bridge this gap, either through early stage project preparation, funding opportunities like the recent one, the Emerge grant program. There's also technical assistance that we provide for strategic projects.
Sorry, you've just said something that I want to touch upon. What's that, a grant program?
Yeah, we've just recently launched an Emerge grant program, championed by the Honorable Minister, that the idea is we just can't keep watching projects seek, early stage finance and not have any opportunity to get something to move. The idea is to identify projects with high potential, research projects as well with high potential, and to support them at that very early stage to solve those nitty-gritty issues that allows them to actually climb up to the other stages of their project development, phase.
Sorry, guys, I think that's incredible. I had no idea that was being launched. So I don't know for the rest of you, there is a grant program now with SMDF to help this thing move forward even quicker. So I don't know, I think that deserves a round of applause.
Thank you very much.
Sorry, please carry on.
Something else that deserves a round of applause that I don't know how often we've understood how strategic it is the establishment of the Africa Mineral Strategy Group. And the fact that our country plays a champion role in it gives us a lot of pride. And it's one of the strongest opportunities we have as a continent to really speak in one voice and unlock that value that we all need for the future of generations to come. So I think that's something we should really actually clap for. And I want to appreciate the presence of dignitaries who have come from across the continent to actually be here to support the AFNIS program.
Thank you.
Thank you. And more importantly, we're also identifying, other strategic private sector partners, strategic advisory platforms and specialized research and laboratory institutions to improve project quality, accelerate investment readiness, and provide investors with greater technical confidence. Programs focused on preparing high potential projects for investment and strengthening Nigeria's advanced mineral testing and analytical capabilities. For example, just having an accredited laboratory in the ecosystem alone can, just off the top of my head, reduce the risk of Nigerian projects or African projects by around 25%. And the fact that you have a laboratory close to you where you don't need to wait a few months and spend so much for your mineral testing and stuff like that brings down your cost by around 30 to 40%, generally through your exploration phase. So this is how providing infrastructure can unlock something much bigger, than that. When we get to the question about DFIs, I would also speak to how there are different roles, different kinds of finances can play to get us to where we want to be as an ecosystem, not just at the beginning, early stage. There's also other parts that need some specific kind of financing requirements, as you go, different risk measures and different, financing mechanisms. And this is what we're trying to make clear to Nigerian projects. It's taking, some time, and ultimately we all know, and what we've agreed on in this conference so far is that capital flows where there is confidence, and confidence begins with preparation, and that's where the patience needs to come in, and the need to see ourselves as an ecosystem and to recognize the fact that not everyone has yet been brought into the ecosystem. There is a lot of technical capacity that is still left out of the ecosystem. To what extent do lawyers see themselves in the mining business? To what extent do for example, to what extent do mechanical engineers see themselves in the mining business? To what extent do nutritionists see themselves in the mining business? For example, there is no mining without people, the health of people and stuff like that. These are things where we all need to look at the mining business as an inclusive opportunity where every skill can be represented to actually unlock projects step by step. And this one where we have small projects, little licenses around, people should see themselves, rather than competing at this very early stage where we barely have anything, we should combine those licenses and try to aggregate the needs that we're seeking, so that people start to support from an ecosystem, from a cluster ecosystem approach, beyond just this one project in just this one location, small cadastral units. What do we do with it? It gets more interesting when there is more and there is like a combination of efforts, in one direction.
Thank you, that's amazing. Yeah. I love hearing that. And there's so much of what you touched upon actually leads into the next question for Akut about this sort of confidence across the borders. We're looking at different types of projects, pooling resources together. One of the things that I want to sort of say to you about I guess the next question is, when a project crosses multiple countries, investors probably face significant sort of regulatory hurdles in each one. So that uncertainty is something that we're trying to address here. I guess what governance and contract structures are the most effective, do you think, from your sort of experience, at giving investors the confidence they need to commit across multiple jurisdictions?
I don't know if you know the Rift Valley Rail project between Mombasa and Kampala. Okay. The lessons learned from there is that the SPVs must be unified. The corridor or regulations must be unified. You can't have subsidiaries of the SPVs signing separate contracts with the different countries. So obviously, if we are looking at ECOWAS, for instance, when we want to deploy or begin to run that kind of regional PPP program, we want to see, what we'd like to see is a unified framework that can regulate the entire process. We want to see deals that are signed by single governments, because multilateral governments now have treaties signed to come as one public party. So in such instances, it reduces the issue of fragmented regulations or the challenges that can come with that. So I think one of the major things that can sort that out is unified framework.
Unified framework.
Yes.
Yeah, thank you. It's almost like you're asking the next question to the doctor. This unification, I think you can see from the theme of this year is this one Africa, one resource vision. How do we combine all of our resources, our frameworks, our ideas to make all of our resources work for us, whether it's mining, whether it's agriculture, whether it's oil and gas, it's power, everything. How do we unify that? Now, some of the areas that that's emerging at the moment, some things that have been proposed by the AU and other things, is this PARC and AMARC. I'd like you to just explain what that is to the audience a little bit, and how do you think that's going to help investors have more confidence in that, and how different governments can adopt this new standard that's being developed.
Okay, thank you very much. PAC is a short form of Pan-African Reporting Code. If you look at Australia, they have what they call JOC, that's Joint Oil Reporting Code. If you go to Canada, you have what they call NI 43-101. All these are reporting codes based on those countries. In Africa, the AU, through AMDC, that is African Mineral Development Center, come out with PAC, which is Pan-African Reporting Code. Now, this PAC is a code that African countries, the 54 nations in Africa, should key in, because one, every geoscience data that is not certified by a reporting code is not accepted by DFIs. And that's the reason why most of us in Africa are behind. In fact, if you look at the African countries one by one, I think it's even internal. We don't even have a code that is a reporting code that guides us. I think it's only South Africa that has SAMREC and the one other people, but other countries, we don't have it. And there is, no matter how good your data is, no matter the kind of work you have done, if this data is not certified by what we call the competent person, registered by those reporting codes, either NI 143 or PAC, it can never win DFIs. So the only thing is that it's for us, Africa, to come together, agree on one reporting code. Because we cannot be one nation and speaking different languages when it comes to geoscience data corridors. It's not acceptable anywhere. So we need to come together and harmonize it. I think the AU are doing something on it about this pack. I think they were here some few months ago. They are going around the countries to collect what you have as your own internal reporting code so that it can be harmonized. Except we do that, there is no way we can come together as a continent and have one reporting code that will be acceptable outside this country. That is the basic fact about it. Because this, for a DFIs, when he sits in his office, he wants to read the same report from Nigeria as the way he's reading the one from South Sudan, as the way he's reading the one from Australia, as the way he's reading the one from Canada. Because the geology must speak the same language. The same geology you see, the same geology you see everywhere. It doesn't change. The same granite here is the same granite in Australia. It's the same granite in Canada. So we're supposed to key in to have this kind of one reporting code that is unifying the whole of the continent. So that whenever we now write our own reports, certified by PAC, endorsed by a competent person, then we can now attract DFIs. If not, we are not there yet, sincerely. Yes.
No, that's a great point, and thank you for explaining that. I want to push you a little bit more on that one. What would it take to get us to the point where, say, you had an intelligence system, for example, that managed all of this, like all African states could get onto it?
No, it's possible to have it.
It's possible.
It's possible. It's possible to have it. You see, the basic line is coming together. That's the bottom line. Coming together and they will agree. And they will work for us. Actually, because we're supposed to work for Africa, by Africans, for Africans. So it's possible. We can do it. It's doable. It's doable. It's just the will. It's just the will. It's doable. It's doable, honestly. Yes.
That gives me a lot of confidence. Thank you. Thank you. I think one of the final, the penultimate question I'll ask to Abdul Majid is moving beyond raw extraction, right? The biggest issue that we've had as a continent is that we've exported the raw ore so long. In many ways, all the different reasons we know. But how do we do that now? How do we move beyond that? Because the stuff that we're taking out of the ground isn't something that we can get back. Once it's gone, it's gone. It'll take hundreds of thousands of years to come back. What must change fundamentally in financing structures, do you believe, or policy, or whatever, for Africa to capture more of this value locally?
I think for capturing value locally, we've already started to put up the posture. The Africa Mineral Strategic Group this is one of the biggest initiatives that they're focused on, which is actually moving Africa from just a raw material exporter to an industrial engine as well that contributes to the bigger picture on the global scene. So it's beyond just now saying we want more volumes above ground. It's now also because the investment in critical minerals has gone beyond just getting the minerals, getting the reserve, and then producing, and then getting the minerals. It's now where it's developing into the entire value system, the entire value chain. Not just getting into the ports. For example, there are minerals we have here that we just can't simply buy the technology from another country to process them, just because they have set a sovereign security of some kind that says, for the purpose of our future, we do not want to share this technology with that country, for example. So if you want to process that kind of mineral, you have to sell it to us after you've gotten it to the best of your ability. So when things like that start to happen, you see that we have to think beyond just the resource and then just the basic processing. It means everything that has to do with what the global market is seeking out of that mineral in terms of a final product, we have to be thinking about it as well and strategically find our own competitive advantage within that value chain, and not just get the minerals out, but find something unique that we're doing to that mineral that every other person needs from us specifically. So I think that is the way we must be looking at it, beyond just, because the critical minerals race, like I said, it's not just about the minerals anymore, it's what happens afterwards as well, because other jurisdictions have mastered the art that we're just now, developing. So while I was growing up, there's something we used to do when you want to learn something you don't know. You repeat it to yourself as often as possible, and then you actually go out there and keep doing it, and then the result will come out. So that's what we need to keep doing. We've heard it here in AFNIS a few times, how we must move from raw material continent to actually adding value to the greater global strategy of survival, not just, material and products. It's beyond that. Thank you so much.
Thank you. Right, I think we're on to our last question, and this one is, again, through it to all the panelists. I think one of the things that we've heard over the last few days is that if we get our frameworks right, we're looking at the adoption of this new mutually assured development framework. We're looking at things like the PARC, standardizing our reporting codes. We're looking about financing structures and how we get these right and new innovative ideas. So this is a bit of a fun question for the panelists here. If we manage to get all of these things right, let's just say hypothetically, people talk about we've got, $6 trillion worth of natural resources on the continent. I disagree. I think it's more than that, but that's another track. But what do you think is possible in the next 10 years in terms of the industrialization if we all did come together? Like, be specific. Let's have some fun with this one. That's to everybody, so whoever wants to take that first.
Okay,
yeah.
Thank you. In the next 10 years, I see Africa for Africa.
Whew.
Yes. I see Africa working for Africa by Africans. That's the way I see it. Because we have what it takes. We have the natural resources abundantly in this country. The only issue is that harnessing it. And harnessing mineral resources and mining is capital intensive. And that is why most people that want to go into mining run to DFIs to fund it. So, by the time this park takes full ground, we have standardized our reporting costs. We have got our exploration right. The DFIs will be ready to come in and fund those projects. And once they fund these projects, which means mine activities will pick up. So, the mineral resources we mine, we process them, we add value to it, we use it here, and we develop our continent. As simple as that. That is how they got it. It's not by magic. That's how they got it. So, what is stopping us? If you come to human resources, Africa is blessed with the best human resources on earth. That is why we are making waves outside the continent. Africans. So, if you can do it for them, can't we do it for ourselves? What does it take us? It's commitment. It's commitment. We get the will, we commit ourselves, we sacrifice, and we get it right. And once we get it right, we get it right and for all. That is all. We'll be there in the next 10 years, the way I see it. If at all, we're ready to do the right thing. Yeah.
Thank you. Akwu.
Okay, I see an infrastructure prosperous Africa that would be completely linked and turn the places we usually call landlocked countries to land-linked countries.
Say that again.
Landlocked countries to land-linked countries.
Amazing. Land-linked countries instead of landlocked countries. It's a great statement. Thank you.
Yeah. In the next 10 years, if, assuming everything that we've all discussed is what we actually go out there and do, I imagine at the basic level, better living conditions for Africans and more productivity. And those two things changes everything for any community. But more importantly is the fact that, mining business, when done entirely, the way it's been designed, it leaves that locality where that mineral comes out from much better than they were, So imagine if we do the right things for the community and the projects and so on in different pockets. Just imagine how that aggregates into, better life for so many people. So I just imagine people having a better life and being more confident in themselves as people, and they hope for something better to come.
Amazing, thank you. Right, I think that wraps us up. So I think if we were to summarize, we have the frameworks in place, we have the resources, we have the innovative financing, right? The one thing we need now is the commitment from everybody to get it done. Thank you, gentlemen. We appreciate all of you. Thank you for your continued support and the great work that you're doing. And we'll look forward to seeing you again next year. Thank you.
Fantastic. A round of applause for them. Archibald, thank you. You've done a great job. Many thanks to the panelists also. Well done. Looking forward to seeing you in 2027, of course. AFNIS. All right. Pictures, very important. Great. Amazing. Please give them another round of applause. They deserve it, don't they? All right. Thank you so much to the panelists and the moderator for that very beautiful session. It's now time for the final signing ceremony. And this is A4A with Niwimro,
also known as the Nigerian Indigenous Women in Natural Resources Organization. Now, ladies and gentlemen, this agreement creates a fundamental framework where NIMIRO will advise and support AFA's community development principles across all their projects in Nigeria. By marrying high-level investment with this level of indigenous stewardship, we are setting a new standard for how we develop our resources.
All right, the leadership of NIMIRO kindly step forward for this milestone agreement. Let's do this quickly. That's the executive director there, Felicia Dairo, coming up. Let's have the A4A team also come forward quickly. We'd also like the media team to take position so we can also document this. NIWIMRO was born last year as a result of AFNIS. Okay, 2024. Amazing. How time flies. I remember, all of these conversations actually took place in AFNIS. And it's amazing to see the beautiful things that are coming out of AFNIS. Fantastic. So Felicia Dairo is the executive director of NIWIMRO. And I understand that women, rather, it's an organization for women in mining. And so far, in the last few months of its existence, I understand that they've been able to impact women positively in that sector. Well done, NIWIMRO. So are we ready for the signing now? Who are we waiting for? Let's have the document.
Documents are there. All right, let's invite you guys into the chairs, and also the media team. Please mobilize yourselves with a camera and do the needful. Let's give them a round of applause, ladies and gentlemen, as this signing takes place. This is the secondary partnership that aligns the AFA, also known as Africans for Africa Fund, with the grassroots expertise of the Nigerian Indigenous Women in Natural Resources Organization.
You know what I say? When you want something said, ask a man. When you want something done, ask a woman. So, seeing a woman in front of this or a part of this, there's confidence that, yes, it will survive, it will thrive, and it will indeed improve the lives of other women, not just in Nigeria, but across Africa. Thank you so much. Congratulations to NIWIMRO and, of course, A4A. I think we're done with that. Fantastic, beautiful. Please, a round of applause for NIWIMRO for that great win. And it's now time to begin to wrap up. I already said we are almost home.
That's right.
So you know what to say. The true measure of this summit will not be the applause we have shared, but the impact we create together. So the conversation extends beyond this room, extends beyond today. We're closing AFNIS, but of course the conversation continues. So in our different spaces, in our different countries, we hope that we continue to propagate the message and of course do what we have to do just so we can support One Africa, One Resource Vision. At this point, would have the Honorable Minister of Solid Minerals Development join us. He's going to do the closing for us, and we want to hear from him as our host, just so that we can prepare our bags for 2027.
That's right, yes.
Fantastic. All right, so.
As the minister makes his way to the stage, ladies and gentlemen, we also do want to remind you and reinforce to you that today's conversations have reinforced one and a key central message, and that is Africa possesses the resources, Africa possesses the talent, and Africa possesses the market. The next chapter depends on collective action. And of course, the Honorable Minister will give us a bit of insight as to what that collective action would entail.
Indeed. The best way to predict Africa's future is to build it together.
That's right.
Yeah, so the Honorable Minister would join us now. We hope that his aides could help us get him in the room, just so we can wrap up and, of course, prepare for 2027. It's going to be a great time in 2027. From 2022 is gotten better. 2022 was good, 2023 became better, and now it's 2026. Looking forward to 2027. I'm excited already. Yes, and I know that many of us in this room would also be a part of that conversation next year. Yes, I can see the aides of the Honorable Minister coming in. So, of course, we have the Honorable Minister of Solid Minerals Development with us in the room. Please, let's rise. Yes, a mark of respect and honor for Dr. Oladele Alake, OON plus another national honor. I must add that. All right.
Ladies and
Thank
gentlemen.
you, Honorable Minister. Thank you for your time. Thank you for all that you do. Thank you for improving the sector. And we deeply appreciate you. Honorable Minister, I do not think you would sit. I think you would just come right up here to close this event and, of course, get us prepared for 2027. Please, a round of applause for Dr. Oladele Alake as he comes forward for the summit conclusion and declarations.
Your Excellencies, distinguished ladies and gentlemen, our various partners, development partners, and CEOs and captains of industries, it's my real privilege and honor to be with you again. First of all, I must express our heartfelt appreciation to all of you for sparing your time to be with us this past 48 hours. For some, quite more than 48 hours. To Jojo, to cross-fertilize ideas, brainstorm on the commonality of our objective, which is advancing the solid mineral sector of Africa. What has really transpired these past 48 hours have been quite robust and charting the course. It's left for us to steer the ship of solid minerals of Africa. You've succeeded in charting the course. Various ideas have been propounded, and the direction is really very clear. There is no argument about where we are headed. Of course, there's been some divergence of views about the modalities, the methodology of achieving these objectives. But there's one thing that we cannot shy away from, and that there is no divergence. There's actually a convergence of interests. And our interests in Africa are coterminous We want to stop the exportation of prosperity and the importation of poverty. Like I said yesterday, that is the kernel of all our discussions. All other ideas, the technicalities expounded, and the various theories propounded are all geared towards achieving this singular objective of advancing the cost of solid minerals and ensuring the efficiency of exploration, the efficacy of extraction, and of course, the judicious utilization of the accruing resources and revenues flowing in from this sector for the benefit of our various peoples of Africa and for future generations. And I always say that every epoch has its mandate. Our own epoch, which is our generation, has a mandate to steer Africa away from the old, stale, jaded model of unequal transactional exchange into one that is mutually beneficial to all of us in Africa. Yes, there is a saying that which my very intelligent MC here mentioned yesterday, which is also something that our president is wont to say. And I can confidently tell you that that phrase is really, really very common with our president. Whenever we're having strategy meetings and we want to aspire to something, and some of us will bring up the challenges, the obstacles, and the president will say, you know, there is nothing, no human endeavor or no goals that you set for yourself without attendant challenges. But challenges are supposed to be surmounted, resolved, so that you can see clearly and toe the path of progress in achieving your objective. So, without challenges, actually life will be boring. So where there are no challenges, you must be careful. There could be booby traps. But when there are challenges, challenges are supposed not to discourage you, but to reinvigorate you, to charge your adrenaline into wanting to overcome those challenges. And when you do overcome the challenges, the victory is sweeter. So he says, power is not served a la carte, like she said yesterday. Power is never served a la carte. Shared prosperity is never served a la carte. We have to work assiduously to achieve this objective. And the challenges we are facing individually and collectively are meant to drive us, to propel us, to challenge us to achieving results for us in this generation and for the future generation of Africans. And I also always tell my people that where there are no challenges, you must initiate some challenges or simulate some challenges in order for you to overcome those challenges. And in the process of overcoming challenges, you are honing your skills for problem solving. I tell my staff, when they say, oh, this thing is difficult, it's never been done before, I said, that's exactly why we must do it. And that's exactly why we must move. Where we don't have challenges, we simulate challenges and overcome the challenges. For us in Africa, the challenges are multifarious and multifaceted. But for us to keep gnawing at it, moaning and groaning about these challenges without real solutions and without practicalizing these solutions, we will never move from this old model that we want to shift away from. So this platform of AFNIS 2026 has afforded us another opportunity to really lay out some of these challenges and proffer solutions to these challenges. I congratulate every one of you, the participants, the sponsors, the organizers, and everyone that has taken part in this AFNIS 2026. Your presence means Africa is serious in overcoming our challenges. And by Jove, we are going to overcome those challenges. And the results have started manifesting across the political, socio-economic firmament of Africa. We see it in the renewed interest of investors into the mining sector. We see these things in the manifestation of increase in revenues across borders, across countries. We see it in the renewed vigor and fervor of our various compatriots in achieving our stated goals and objectives. We will never be tired of laying out the challenges, but we will never grow weary of overcoming these challenges. For me, challenges are opportunities. Challenges must be converted into opportunities. And that's what we're doing here. That's what we've been doing for the past 2 days. And that's what we will continue to do. I enjoin all of you to imbibe this spirit of can-do. Our president also always alludes to this aphorism that what we need in leadership in Africa are people who are thinkers and doers. You must be able to think deeply, because it's through deep thinking that solutions are proffered. But that's just half of the coin. When you do the thinking, you proffer the solutions, you must be a doer. And that is pragmatism, practicalizing your solutions, putting these solutions on ground, putting the boots on ground with brains and with bronze. And believe me, those factors and variables of achievement, of progress, have never failed anywhere. Those developed societies, as I always say, didn't develop overnight. A lot of them have gone through the various phases. They've gone through the crucibles and throes of development. There's nothing we are going through either in Nigeria or in other parts of Africa in terms of re-engineering our socio-economic environment with its attendant associated pains and groans that are new. Some of these developed societies, if you are a student of history as I am, will know that they've gone through worse periods in their trajectory to arrive at where they are today. They are at the tertiary level of development, but we are at the elementary stage of development. So there are no shortcuts. We must go through the throes of development. We must go through the pains, but we must remain focused. We must never be distracted. And for you to be present for this AFNIS 2026 is a demonstration of that seriousness of purpose. I'm very comforted in the fact that everywhere I go in Africa for these mining events, the enthusiasm has been real, the zeal has been ideal, and the results have been showing. I thank you all for coming, for participating, for giving your best. The mental exercise that we've been going through is not in vain and is never going to be in vain. We have mapped out some achievables. In fact, the signing ceremonies that we had here are eloquent testimonies to stated objectives and achievement of goals. Last year or 2 years ago, right in this hall, we initiated some ideas, and some of the signing ceremonies are the culminations of those ideas, which means these AFNIS events have not just been exercises in vain. They've not just been talking shops. They have actually been platforms and avenues of results. We are looking forward to more results in the coming weeks, months, and years. And God sparing our lives, next year we will be here again to recount the achievements that we initiated at AFNIS 2026. I wish all of you Godspeed as you go back to your various destinations. And I want to leave you with this appeal that as we live here, we don't want everything to end here, not just in speeches, in addresses, in remarks, and in photographs. We need actualities. In my profession of journalism, a part of it is in broadcast. In broadcast journalism, TV, radio, and co. When a reporter brings you the story as an editor, you look at the story, which is the written word. Then you ask the reporter, where are the actualities? The actualities are the footages that would vividly illustrate the credibility of the stories. So by next year, we are looking forward to the actualities of those ideas that we've propounded here in the last 48 hours. Once again, I bring you deep appreciation from the President of Nigeria, President Bola Ahmed Tinubu, GCFR, and like my Secretary General of AMSG always asks, this GCFR, what's the meaning? And I said, the Grand Commander of the Federal Republic of Nigeria. And then he told me just before we got here that after the investiture ceremony here this afternoon, that I am now the commander of the African Mineral Strategy Group. So, MC, you should know that. Personally, I'm not someone who is given to appellations and titles and all that. And that's why, many people don't even or didn't know that I had a national award before the last one was announced, because I hardly used some such things. Because I've been told, and I was brought up by my parents, to appreciate the fact that the hood does not make the monk. But it is through the assiduity and celerity of your work that people will recognize you, not through the accumulation of titles and accolades. No. But what we've done here is not to acquire accolades. It's to actually put our money or mouth where our money is, or vice versa. Is to actually practicalize the ideas that we've been propounding. And it's actually to drive us to increase our vigor in achieving the best for the largest of the African population. We seek to improve our societies, through purposeful leadership. And leadership is not just political leadership. There's leadership strewn along the entire landscape. There's leadership right from the home front. There's leadership at the community level, at the local or provincial governmental level, at state and national levels. So leadership is not just those who are at the top of the political echelon. Leadership begins from the home front. And once we now become used to the attributes and values of correct, genuine, sincere leadership, Africa will rise. I want to leave you with those words. Let us at all times think that we are leaders, believe that we are leaders, and we're actually leaders at every facet of human endeavor. If you are not a leader in your class, you are a leader in your home. Or you are a leader on your street, you are a leader in your province or in your society. And they say examples are better than precepts. When we live with admonition and exhortation, those don't achieve anything. It is examples that people see and copy. And you have displayed exemplary character by your patience and resilience the last 48 hours. I wish you continue to do so in terms of giving vent to all our decisions and declarations. Your Excellencies, my colleagues, distinguished ladies and gentlemen, I thank you all for attending this AFNIS 2026, and it's my honor and privilege to declare AFNIS 2026 closed. Thank you very much.
A round of applause for the Honorable Minister, Ministry of Solid Minerals Development, Dr. Oladile Alake, OON, another national honor, plus Commander Africa Mineral Strategy Group. Thank you so much, sir. Thank you for your kind words. Indeed, journalists are rare breeds. If you have listened to the Honorable Minister speak, you would agree that being a journalist is the best job in the world. I'm very excited I'm in your profession, sir. I'm your junior colleague, and I hope to come to you for more mentorship. I would love to speak like you do. And of course, I must say, or we must say, that we are proud of your leadership in the Ministry of Solid Minerals Development.
Absolutely.
Thank you so much, sir. All right, it's time to go. All has been said.
It has. There's a saying that says, better is the end of a thing than its beginning. And fortunately and unfortunately, we have come to the end of AFNIS Africa Summit 2026.
I think we'll rise and do our call and response. That will signal the close of this event, and of course, we'll take the national anthem. So we're going to say AFNIS 2026, and you're going to say one resource vision. And when we say one resource vision, you say one Africa. Are we ready? May we please rise as we close with that?
And let's make sure, I know that it's the end of the day, but we've had lunch, we've networked, so when you say it, let it come from your bowels, like from the very core of your soul, all right?
AFNIS 2026.
One resource vision.
One resource vision.
One Africa.
Let's do it one more time. AFNIS 2026. That's
it.
One resource vision. A round of applause for yourselves. Thank you very much. Let's have the national anthem. That signals the close of AFNIS 2026. Looking forward to seeing you in 2027.
That's
of
right.
course, I'm super excited. The national anthem now. out of time. Safe travels to all our foreign delegates. See you next year. God bless Nigeria. God bless Africa. And of course, God bless all AFNIS delegates who will be in AFNIS 2027.
Definitely.
Thank you so much. Have a good night.